Hello, agents. Hello, everybody. Today is April 7th, 2022. Take a look. The 10-year Treasury, 2.65. We've seen rates increasing all month, and we also have some in the immediate annuity guaranteed income for life. So I'm going to jump into the April rates for immediate annuities, longevity quotes, and I'm going to show you the option of longevity through withdrawals and see the difference between that and immediate annuity. So let's go ahead and get started on that right away. So here's the immediate annuity pricing for April the 2022. So this is the male on, we're going to assume $500,000 of premium, premium tax state, and this is non-qualified money I'm using. This is with an A+ carrier, and I'm going to put multiple options in. This is available this week. You know, rates are subject to change at all times. Could go up, could go down, but you look at them about 7-day basis on these immediate annuities. So here's the a male, and as you can see, if we pull out just the 60-year-old at the life in 15, it's $24.24 a month. If you times that by 12 and then divide it by the premium 500, it comes out to 5.82% annually. So that's the magic number. That's what you need to be able to withdraw and never run out of money, 5.82% or some equivalent of that. On the females, same thing. These payments start in 1 month after premium is received, and then they go for life. There's the female numbers. You can go ahead and pause the screen there if you're interested. These are based again on $500,000, and we do life only, life 5, life 10, and the refund options as well there. Any questions on that, just give me a holler. And let's just jump back to the 60-year-old again on the life in 15. So they're taking 24, which is about $30,000 a year, call it 29 and change a year. So what is another option if you wanted to take 29,000, but you didn't want to tie up all your money with the insurance company? So let's look at the interest income longevity. And currently you can only do these in about 10-year periods. There are some companies that go longer, but let's overall about 10-year lock. So in the first 10 years, you're guaranteed 3.55%. And that'll bring you back up here to these values here, about 355,000 being your account. So we're stripping 29,000 a year out of this. And at age 75, which is when the 15-year certain would have ended on the other one, you're now down. So you were taking 29, but now you're over 10%. But let's say, just say the person died in that 15-year. With the immediate annuity, you're out of money. With this one, you'd still have $245,000 lump sum. But eventually, as you can see here, you're at age, age 80 here on the 18th year. You still have 212,000, but you're running low on money. So as time goes on, should you live to 100, you could run out of money here. But you got to live pretty long, and you got to make sure that the rates in years 10 on are high. So we're quoting 3.55. That's not guaranteed. Could be higher. Money will last longer. So this is an option. Shop that MYGA. Make sure it has free withdrawals if you're looking to keep the principal intact and yet still get an income. Remember, these are more taxable. There's an exclusion ratio on non-qualified money. So there's a little tax different, but in the end, it's the same payout basically, but you get a longer term death benefit because the guarantee isn't as long. And you can't pull that 29,000 out of all these accounts unless they're out of surrender or something. So there's a little more nuance to the stripping the interest than there is to the immediate annuity, but it is available because I've heard some people just totally discount the immediate annuity because they cannot have their funds back. They're tied up. They cannot access them. So here's a way you could, if you needed to, you could access some of your money. A lot of nuances to that. So, take it as a basic idea right there. Okay, next, period certain immediate annuity. So these are just for people who, this is all guaranteed. You're not based on life, and it's going to pay back a certain amount for a certain period of time. So as you can see here, it spreads out. It really depends on the insurance company. Here you have the fraternal, of course, doing the best, but they're lower rated. And then once you jump to the high rated carriers, they're doing good. But you see the 5-year is good on this A+, whereas the 25 years better on this A+. And this A+ just doesn't even play in any of those. However, I think it had a higher commission. So there's a different variable for all these payouts. So really, again, shop that SPIA and know what options you're looking for and do a diverse view of all the carriers in the industry to make sure you know, especially if you're shopping many options or many age groups. So that's that. If you're looking for an illustration, you can go to our website right here and it should play here. And you can go to MYGA quotes right here. If you go to MYGA rates at the top, there you go. You can click on deferred illustrations, bring you to this page, scroll down, put in your information, request a quote. Actually, that's doing immediate annuity, so we'll just jump off of that. But anyway, you can go to our website, click on that area, and it will give you everything you need. Here's some information. Pause the screen, just our disclaimers. Again, thank you very much. That's the end of my presentation. If you need any immediate annuity quotes, give me a call or go to our website, annuityexperts.com, for immediate annuity quotes. And we can do that. If you need interest-only withdrawal quotes, that's the multi-year guarantee. So all good there. If you have any questions, please give me a call right here, 800-373-9697. And keep up to date with us on Rumble, YouTube. Really, LinkedIn, I do pretty much every day, and even Instagram lately, we've been doing those. But rates are changing so often right now. I just got another rate increase, 20 beeps from another company, which brings them to 3.25 for 5 years. We'll get into that next. Anyway, I hope you're all having a good week. Today is Thursday again, so the weekend's coming. Take care, follow, like, give me a call if you need anything. Thanks again. Bye-bye.